Hey traders! Welcome to another video. In this video, you will learn the best pairs to trade in the forex market, the forex sessions, and their correlation. You must be familiar with the most active currency pairs before diving swiftly into the fast-paced world of foreign exchange market. And because there are hundreds of different currency combinations available on the biggest and most volatile forex market in the world, I have created this video to share with you the most popular forex trading pairs, the sessions liquidity, and their correlation. This is to help solve the problem of the frequently traded forex pairs and why they are actively traded. So if you're curious in learning more about advanced concepts, strategies, entry reasons, and how to stay disciplined with the trading plan, please click the like button for the YouTube algorithm, subscribe and turn on the notification bell to get notified when we upload a new video. So without further ado, let's get started. Now, in the financial market, or basically the forex market, we have 4 sessions with enough and more important currency movement. But these 3 sessions are the major sessions we have in the forex market. In these sessions, we have currency pairs that work best together when traded as a pair. So, in each session, you are to consider the currency pairs that are going to have more liquidity, and how these currencies are correlated in different sessions. In general, forex pairs can be separated into 3 categories. The first category being the majors. Major currency pairs are those currency that are most traded on the forex markets. We have different opinions as to how many major currency pairs there are, but mostly the majors currencies includes Euro USD, USD JPY, GBP USD, and USD Swiss franc. Now, we have commodities or trade currencies. These currency pairs are the currency pairs that have a value closely tied to a commodity, such as oil and the coal. The commodity currencies we have in our record are the AUXI USD and the USD card. And finally, we have the cross currencies. These are currency pairs which do not include the US dollar. The 2 cross currency pairs we have on the list are the Euro GBP and Euro JPY. So, in the forex market, apart from these 3 categories, we have 7 major currency pairs. The major currency pairs are the most actively traded pairs in the world, making them to have a relatively low spread than all other minor pairs. And because of the low spread, traders have more interest in trading these pairs. Now, let's review the 3 major sessions and go deep about it. Let's start with the first one, which is the London session. London is considered the capital of forex. Although there are several financial centers all around the European region, it is mainly London that attracts the main interest of traders, making London the key financial center, with a huge trading volume of over 32% of all forex transactions, which makes it to have a high liquidity. It is the session with the most market uptrends and downtrends. It has lower spreads, and the volatility slows down a bit in the middle of the London session, for the simple reason that most traders are off for lunch until the New York trading session starts. Market trends may reverse sometimes just before the London session ends, as European traders decide to lock their profits. In the London session, these are the currencies that you are most likely going to get. First, we have the British pound that is open, the euro for the eurozones, the Swiss franc, and some movements in gold as well. These movements are important in forex, as it helps to determine which pairs will have more liquidity, volatility, and are easier to trade in the London sessions. So it will make no sense that you will want to trade currencies like Australian dollar paired with New Zealand dollar in London session, because it will have no liquidity and movements that we would like to see when we want to place a trade. So we need to look at the pairs that are being actively traded in these sessions. Another important point that you will need to check is how currencies are correlated in different sessions. If you look at the British pound with Australian dollar pair, and the British pound paired with New Zealand dollar in London session, you will notice that they all move in the same direction. The reason is that, in all of these pairs, only the British pound is the currency that is being actively traded in the London session, so their movement is influenced principally by British pound only. But if you look at the Aussie dollar pair, you will notice that it may not move as the other currencies moves during the London session. And the reason is that both Australian dollar and the US dollar are not being actively traded during the London session. So now you have a fight between 2 currencies that are not actively traded. So when you are looking for a trading opportunity, always try to choose a pair that is influenced only by one active currency in that session. Few examples is when you want to trade pound paired with dollar, euro paired with dollar, and pound paired with Japanese yen in London session. Now, let's move on to the second major session that we have, which is the New York session. So when the London session is just few hours to close, the New York session will start. We have got some features that marks the start of the US session. The first one is that the big market moving potential, like 85% of trades, involve the US dollar. So you should expect high liquidity in the hours when it overlaps the London session. Roughly 19% of all forex transactions are carried out during the New York session. Most economic news reports are released at the beginning of the session. Liquidity and volatility decreases during the closing hours of this session. They have a small amount of movement on the Friday afternoon plus high chances for trend reversal in the closing hours. So during the New York session, the US dollar, Canadian dollar, gold, pound, euro, and Swiss franc are the currencies that are being actively traded. So when you want to trade during the New York session, the major currency pairs you are supposed to have your eyes on are the USD/JPY, GBP/USD, and the Euro/USD. And sometimes these three pairs. This because the US dollar, which is the actively traded in this session, will provide the liquidity and volatility that is needed to drive these pairs. Now, let's move on to the last major forex session, which is the Asian session. Japan is the world's third largest forex trading center, and even though we call it the Tokyo session is not the only busy forex region during this period. Some examples is the Hong Kong, Singapore, and the Sydney session are also the active players in this session. The Asian session begins with the Sydney Open and ends with the Tokyo Close. The most traded currency is the Japanese yen, covering 16.5% of all forex transactions. Approximately 21% of all forex transactions are carried out in this session. Liquidity can be quite small at times. Because of this small liquidity, most currency pairs will trade within a range, especially if there is a big move in the preceding New York session. During the Asian session, when the economic news from Australia, New Zealand, and Japan comes out, you will most likely see stronger moves in pairs that contain JPY, OXY, and NZD. One of the important things you must be aware of is that currencies have both strengths and weaknesses. For instance, in order for USD/JPY to move, you must ensure that one pair is weak and another is strong. If you want to trade USD/JPY during the Asian session, there is a good possibility that the market will have spikes in movement. Because the JPY, being the strong currency in the session, will cause the pair to move. But if both currencies are strong, there is a high chance that the market will consolidate and be hard to trade. So, whenever you want to place a trade, we have two things that you have to consider before you enter any trade. Number one of them is the spread. Now, the spread in forex is a small cost built into the buy and sell price of every currency pair you trade. It also determines how fast the trade that you placed is going to execute. When you look at the price that is quoted for this currency pair, you will see that there is a difference between the buy and sell prices. This is the spread, or sometimes called the bid-ask spread. So low spread means fast execution of your trade. These are the currency pairs that have the lowest spread. Now, the second key takeaway is the market liquidity. Now, the liquidity in the forex market refers to a currency pair ability to be bought and sold without substantially changing its exchange rate. So, a highly liquid market means that an investor can jump in and out of the market quickly. In contrast, an illiquid market means that an asset cannot be easily bought or sold. And illiquid markets have large spreads, which results in increased transaction cost. If you are interested in learning advanced concepts, strategies, entry reasons, and how to stay disciplined with a trading plan, then please click the like button. For the YouTube algorithm, subscribe to our channel, and turn on the notification bell to get notified when we upload this high quality and advanced free trading contents. If you have your own ideas about the best pairs to trade in the forex market, please share them in the comments section below. Thanks for watching. See you in the next video.